Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host for Upticks. Today is episode 121, Investor Behavior. All right, welcome back to the show. I hope that all of you out there are staying safe and healthy during this horrible pandemic. For today's topic, I wanted to bring up managing investor behavior. And it's actually one of the services that we have listed at Falcon Wealth Advisors of part of our offering. And oftentimes with new clients, I'll get a question as, what the heck is that? What do you mean you're going to manage behavior or help me with investor behavior? And I think it's very important that individuals understand that a big role of a wealth advisor is to help clients make rational decisions in an irrational world. And there's many things that go into managing investor behavior. I think one of the most important things that we do that our clients really appreciate is that we manage their assets on a discretionary basis. And what that means is that if we want to buy XYZ stock and sell ABC stock or whatever, we don't have to call every client and get their approval. Our clients are paying us a fee for our fiduciary advice, meaning for our advice that's in their best interest, and we're going to make the trade. And we're going to make the trade not based on emotions or behavior. We're going to base it on valuations or expected returns or PE multiples or earnings or dividends, right? Typically quantifiable things. And I think it's a big part of what we do. So that discretionary management would be, number one is how do we manage behavior? Well, we take the emotions out of it for you so that we don't call you up on a Tuesday when you're busy working or enjoying retirement or traveling, maybe traveling, eventually traveling or whatever you're doing, and having you make a decision based on something. Another big part of investor behavior is staying disciplined to your saving strategies. So that's whether it's maxing out a 401k, a Roth IRA, putting money in a health savings account, or increasing your donor advised fund contributions for charitable purposes. All of that is helping you manage that behavior. And I actually had a really good meeting with a client yesterday who made a good point. They said, Jake, as much of this stuff as we can automate, the better, because we're not going to go out there and proactively do this thing. So we can help do that. We can help you automate your savings so that you don't have to think about when do you need to write that check, when do you need to save, and so forth. So I think that goes into managing investor behavior. And then a lot of questions that I've been receiving lately are all around, should I sell my stocks now that the market's up? And first off, I think that's actually a pretty prudent thought. I think people are being prudent when they say that. It's like, hey, Jake, the S&P 500 is up over 10% this year, even during a pandemic. Is it time to cash out? And the problem with doing that is that you don't know what 2021 is going to bring. And every one of our clients that has a financial plan, certainly, which is 95% plus of our clients, they have a target rate of return, meaning your target may be 6, 7, 8%, whatever it is, based on your financial plan. Well, that target return, though, is not based on getting in or out of the market. It's based on, believe it or not, staying invested in stocks and bonds. So the beauty is you don't have to make that call or ask us to make that call for you. We don't have to say, should I get all in or should I get all out or should I trim or hedge and do any of those things, because your financial plan's trajectory and the historical returns, which again is no guarantee of the future, but historically speaking, our target rate of returns have been based on the assumption that you have stayed invested throughout your investing time horizon. So the beauty is you don't have to time it. You don't have to say, well, the market's up, I need to sell, or you don't have to do that. Now, there are things that we do though. So we will rebalance your portfolio. So if stocks become overweight, we will sell them and buy bonds. And they normally become overweight when the market's up. So we do sell when things are high. Just like back in February, March, when things were down, we were buying stocks because now they were low in your portfolio. So we're definitely doing those things. But the beauty is you don't have to use this subjective thought of, well, the market's up and the pandemic's still here and we don't know what's going to happen in the Georgia runoffs for the Senate, taxes could go up, all these unknowns. You don't have to make that call. Your projections based on being invested during all different types of market cycles, right? So we don't have to make that call. So the important thing is to remember is, again, part of managing the investment behavior, one, we're doing it on a discretionary basis. So we don't have to call you and force you to make some decision that you may not be properly informed to make. Maybe you are informed, but you don't want to make it because your emotions are involved, right? So that discretionary investment management is very important. Two, helping you stay disciplined on your saving strategy, right? Automating what we can, certainly. And then three, based on macro events or what's happening in the market, just remember, you don't have to make a call, just because the market's up big, you don't have to make the decision. Do I make my plan more conservative now? Or do I sell everything and go to cash? Or do I get more aggressive? You don't have to do all that because the financial plan is not expecting you to do that. And that's what's most important, is that you stay disciplined to that plan. And that is a big part of helping you, with your behavior and making good, rational decisions, like I said, in an irrational world. So if you're not a client of Falcon Wealth Advisors and you want some help doing that, or you don't feel like your advisor is giving you that, give me a call, certainly. Also, I'm out there on most all of the various social media platforms. So I'm on Instagram, Facebook, Twitter, and LinkedIn. You certainly can connect with me. And if you want more great content from some of my fellow team members, a quick shout out to Corey Bittner, who has his own podcast where he talks about staying disciplined and some of the things that we're doing for our clients, called In the Money Insight. And then my other colleague, James Lewis, does have his own podcast and blog as well, called Financial Philosophy, where he takes a deep dive currently into the world of pensions. So that is all the time that I have for you today. As far as fun things bringing up, I'm going to try to sneak in some rounds of golf. It's crazy. The weather in December has actually been pretty mild in Kansas City. Maybe as of the airing this, we'll have some snow on the ground. But as of today, you can see behind me, it's actually pretty sunny, and I think it's going to get into the 50s this weekend. So might try to stay active, get outdoors, stay healthy, and squeeze some golf rounds in. Like I said in the beginning, though, I hope all of you out there are staying safe and healthy. Please feel free to connect to Falcon Wealth Advisors as well. We're out there on the various social media platforms as well. So we're out there on Instagram, Facebook, LinkedIn, and Twitter. Thank you again for tuning in, and I hope all of you have a great week.